Our economy shrank by just over 1% in the third quarter. And of course, that is a pretty strong signal that these rate hikes have taken the steam out of growth. OK, well, let's have a look here at the technical recession picture. The previous quarter's results were revised higher. So it turns out we didn't actually go through a recession. And we have a flash estimate for October suggesting a slight increase in output. But let's bring in Pedro Antunes, chief economist at the Conference Board of Canada. Pedro, great to see you. Essentially, though, we've been looking at several quarters, at least 2 quarters of weak growth in Canada.
Yeah, definitely. I think, certainly it was expected. I think we were looking at very flat numbers for the third quarter. We did come off that slightly negative quarter we had in the second, but as you mentioned, it just got revised up. So, in fact, these 2 quarters have offset each other. We have essentially a flat economy since the first quarter of this year. And looking ahead, you mentioned a slight upbeat here in the monthly numbers. Again, I suspect we're going to see a fairly weak consumer coming into the third quarter. I think there's a lot of, there's a lot of headwinds on the economy with the high rates that we're having. And so this is in line with our expectation, in line with that soft landing story where the economy holds steady, possibly for another couple of quarters yet to come.
So are we in recession conditions or just slow growth?
Well, I think, again, typically when we want to look at what is a recession, we want to look at, is it widespread? Is it affecting a lot of industries? Mm-hmm. Is it affecting consumers and employment? And I think thus far, with the up and downs that we've seen, with the employment numbers holding fairly steady, I'd be reticent to call it a recession quite yet. But we are, as I mentioned, expecting further flatness in the economy over the coming quarters. We could very well see more repercussions on labor markets, and we're expecting to see some softening, certainly in employment levels, and that is, we're expecting to see some declines in employment as we go forward. So it's going to be, if everything works as planned here, a mild slowdown, a mild recession, if you'd like, to help get essentially those inflationary pressures down. So again, this is kind of falling into plan. Where I worry is if we do see, we just put out our consumer confidence numbers for the latest month, and they're looking very grim. I think we're seeing concerns around how businesses are going to fare in the coming quarters, and so there's the very strong or very real risk here that we could see a harder landing. Right now, though, I think the call for us would still be that kind of soft landing scenario.
I know we talk endlessly about house prices and the housing market. Is there any kind of clear correlation between housing prices, and I know they vary widely across the country, and the actual performance of the economy?
Oh, well, I think, yes, definitely. If we go back to what drove housing prices through the pandemic and the couple of years that followed, really it was access to capital. It was very low interest rates that allowed people to borrow heavily to add essentially borrowing and capital to what it was an existing fixed stock of housing of around 16 million units. So that's what ramped up prices. I think we're going to see a very different real estate market. We are seeing, in fact, already a very different real estate market. I think we're going to see long-term borrowing rates stay higher, certainly higher than they were even pre-pandemic. Mm-hmm. And I think this is going to serve to cool that market and cool prices somewhat. But definitely, I think the good news is that we're seeing a lot of effort, and still a lot of investment in new construction. So hopefully we'll see some of those pressures continuing to ease as well on the supply side of the market.
And what about these tax cuts and government spending aimed at increasing the housing supply? Will they provide a significant boost to economic growth?
Well, certainly I think housing is an important part of the economy. I'd rather see a little bit more focus on the productive capital side of the economy, that is business investment. But of course, affordability is a political issue. It's obviously in the sights of all levels of government, and we have seen a lot of efforts, including a number of programs, mortgage bonds, et cetera, to try and kind of stimulate the supply side. It's going to take a while to fix the affordability issue. There's no doubt about that. It takes a long time to kind of fill the gap on the supply side. So I wouldn't look for too much there, but definitely those programs are helping to support, I think, continued construction spending and construction activity on the residential side. Where I worry, though, is we have seen essentially the crowding out effect, and this is essentially government borrowing taking up a lot of capital, leading to higher rates, both here and I would say in the U.S. and globally. And when we look at the business investment picture, the adding to machinery and equipment, productive capital, this is where I think we need more focus and more effort. We're really lagging there, and the third quarter numbers that just came in show further declines. So I think that's the piece that we need to work on if we're looking to drive economic growth going forward.
So we should be investing more in capital stock, machinery, technology for employees rather than housing ad nauseum.
Well, housing is, it's great for homeowners if they have housing. Of course, that's really an important issue, but it doesn't really add to our productive capital. It doesn't really deal with those problems around productivity, around driving essentially those future jobs and future growth and future real incomes really for our country.
And I'm sorry, I know this is kind of getting into econometric jargon, but so we had in the second quarter, we had an increase of 1.4%, but the Q3 was down. So we have not had two back-to-back down quarters in Canada.
No, we haven't. No, because of the revision in the third quarter. Sorry, in the second quarter. Essentially, we've had flat growth for the last two quarters. So no growth at all, essentially, in the economy since Q1. So and again, this is a very different. Even if we do get into 2 quarters of declines, it's a very different situation than what we lived through. For example, in 2007, 2008, it's not a collapse in demand here. It really is a policy measure where the central bank is essentially pressing hard on the brakes to try and get the economy to slow down so that we can ease up on those inflationary pressures. And the other piece I think that's coming in to thwart some of that is the fact that we've seen immigration ramp up so quickly. Now, on the one hand, that does add to consumer spending and underlying demand. But on the other hand, it is also helping us close the gap on the real crunch, which is that we don't have the workers, or we didn't have the workers to supply the demand that was out there. So we had essentially a supply crunch caused by a very tight labor market. So there's two sides to that story, and just in the numbers released today as well, we're seeing the job vacancies come down, and I think that's a good sign. It suggests that labor markets are continuing to ease. And hopefully the bank will see that as a positive, and we won't get any further interest rate increases. Pedro